How y'all doing? Paris Blockchain Week, day 69? Feels like day 68 or 69. I'm Jordan French, out of New York, Grit Daily News, and also the publisher at BlockTelegraph. Love coming back out to see you all. Love doing events, love moderating. In that vein, we have an awesome panel with us, so I'm going to pull them right up. Iana Dimitrova is here with us from OpenPayd. Come on up, Iana. I'm going to give you this chair.
Thank you.
Yes, thank you. Sam Buxton is with us. Sam Buxton from Damex is here with us. Just grab a mic there. Erhat from ARF is here. Grab that. And then Constance Wang. Constance, so when Constance comes back to us, just push her out. Yes, but Constance is in the VIP. She's in the VIP area. Very busy. A lot of meetings and payments she has to do. She's make a lot of payments. We can talk about her just a little bit. She showed us some artwork. She was in Senegal. Yeah, she was in Senegal on the continent of Africa. I'd asked her. She's like, "Oh, I'm in Africa," and then she said, "I asked where." It was a big continent, which will come up in just a moment. And she said, "Oh, in Senegal," and she said, "I bought some art," as you do in Senegal, right, Iana? And it was impossible for her to pay by credit card, right, Sam? And she had to pay by crypto, which is something that I think all of us have done at some point. And so if I could just get a really quick raise of hands, how many of you, we were just talking about you, Constance. Big round of applause for Constance Wang joining us from FTX. Just a real quick raise of the hands while she makes sure her mic's on. Do a little mic check. Test. If I could get a raise of hands, who has paid for something using cryptocurrency in this crowd? So don't be shy. Just raise. You can raise your hands. Yeah, we can all do that too.
Test.
Not everyone. Test. Not everyone.
I don't think any. Oh, okay.
Test.
Okay, we can hear you. We already thanked the AV people. That's why these things work. Otherwise, it gets really choppy. So a great segue, Constance, just to fill you in, we were talking about your trip that you just had to Senegal, and you bought 2 pieces of art. You showed us the artwork, and you purchased with crypto. I just did a raise of hands. It's only maybe half of the crowd that has purchased something via cryptocurrency. But pick up the story where I just left off, because one thing I didn't get to ask you yet is if you use stable coins, for example, or some of the crypto, can you describe the transaction that you used to buy the art in Senegal?
Sure. It was we were on a topic about payments. For sure, we're on the payment panel, and I was in Senegal a month ago, and for some business trips. And after I'm done with all of my meetings, I really love arts. I want to see some African arts, so I went to one of the oldest gallery. It was actually pretty big gallery, and when I'm trying to check out, there's no credit card. I mean, they have this credit card terminal, but it doesn't work. So I didn't really know how to pay for that. They were like, "Oh, we can accept digital money if you have that." So and they are open for Bitcoin and USDC. I was like, "Oh, how about USDC and also Tether?" So, but of course, I like USDC a little bit more. So that's how I pay for those 2 pieces of arts, and it really blew my mind away because in Africa, wherever I go, credit card doesn't work, and I have to either pay back cash or digital money. So other than crypto, they have other mobile money where you just scan each other's QR code and money is immediately at your mobile. And I was buying something on the street, and my African colleagues were helping me on that. They just literally put away 2 phones and was like, "Oh, cool, this is my QR code and my money is in your phone right now." And it's like so fast, and that's like the perfect infrastructure for crypto, where if you just connect those QR code to a wallet, then you can just immediately use crypto. So that's what's inspired me to really look into emerging markets such as countries in Southeast Asia, in Africa, in Latin America, where their traditional finance system is not as strong as developed countries, and the local currency is not as strong as the developed countries. And especially for Africa, they were left out for the entire, credit card payment decades because they were not there yet. So now they literally loop in for decades from like banking to digital money or digital assets.
Right, certainly, and I think that lays a lot of great foundation, Constance, because we'll get in a little bit later some of the things that FTX is doing, what you're doing specifically, but lays some really great foundation for our mindset, because it's often what I would describe as a rather Western audience. We've very built up institutions here in France. It's easy to have the opposite experience, as demonstrated by my raise of hands. A lot of people haven't needed to use cryptocurrency, and especially stable coins like you did. So thanks for answering that question of how you did it. We don't confront that, but most of the world probably does. So just to unpack that a bit more, and Ali, I'll bring you into this with ARF specifically. I was hoping you could describe some of your own experiences in Turkey specifically, so I know a lot of that contingent is here, and see if we can bridge that into explaining some of the specific things that you're doing.
Sure, of course. In Turkey, we have this. We started ARF in 2019, and in Turkey, there was this problem very similar to that, but in a way, the acquiring bank and the issuing bank of the credit cards does not know each other, and sometimes you get this kind of problems. And we were thinking about, we are all four co-founders are Bitcoin maximalists, and we think that, hey guys, let's develop a technology for Bitcoin and let it compete with Visa network, MasterCard network, so we can develop this technology to make payments in Bitcoin feeless and instant. How can we do that? Then we developed the technology, published a paper. It's a layer 2 Bitcoin technology, and it's very similar to Strike right now in the US. And we provide a white paper. We presented it, and it was great. I mean, we have the app. People are using it. It's very, very nice. But at the end of the day, we noticed that we are only talking to a certain limited community who understands, knows Bitcoin, and who can really work with that and okay with all the fluctuation. And after some time, we also see that the main problem we saw between the two worlds, the traditional finance world and new finance world, I can say that one thinks that the other one is a punk listening, new age kid, and the other thinks that it's a very, I mean, let them have their time and we'll come to their place. So we start building a bridge between them. So we are helping them to work each other in a fully compliant way. So ARF transformed to a settlement network in cross-border finance payments, which help licensed money service businesses make settlements in all around the world with each other.
Right, and so you make a point here. I just want to unpack it for the audience so that we're all following very clearly, and perhaps we can do it with numbers. The payments market globally is enormous. It's around the what mark?
It's incredible. The payments industry is $2 trillion only in revenue, not in volume, only in revenue. And when you look closely, there is $4 trillion locked capital in cross-border, not in cross-border, but in all global payments industry. If you look at cross-border, the revenues are tens of 2 trillion. It's $200 billion revenues, and locked capital is also very, very similar. So at the end of the day, you can say there is this huge need for current traditional financial system, not only banks, but licensed money service providers, neobanks, e-wallets, remittance companies, FX providers, and all these kind of licensed players to see cryptocurrencies, digital assets, and stable coins, and see an opportunity for them to lower their costs and have this pre-funding and capital needs better for them, creating better opportunities for them.
Right, certainly, and just to unpack that just a little bit more, and repeat this back to you, of that, $2 trillion in just revenues, you said there's also $4 trillion. These are huge numbers in locked capital. A contingent of that is crypto that's locked up. In other words, there's not ramps into the sort of traditional or centralized banking system, which we'll get to in just a second. And there's a relationship that you're working on at ARF specifically in getting banks that technology so that they can access that capital.
Correct. I mean, for example, JP Morgan has built a network of 400 banks running on stablecoins, making them have settlements easier. So we are building this payment network, you can say. It's very similar to a global settlement bank for EMIs, neobanks, or licensed money service providers. But the crypto or blockchain technology, along with the digital assets and stable digital assets, provided a huge opportunity to move the money in cross-border in real time, along with the information. Before that, the only information was provided in real time, like SWIFT. SWIFT is the information layer, and all the money moved in settlement banks, in correspondent banking, later in intraday, later day. But via blockchain and digital assets, now there is this huge opportunity for banks, for licensed MSBs, also to move the value to a local corridor or country.
Certainly, and Iana, Ali just mentioned a huge opportunity for banks. It sounds like one, but it also sounds like they already have and own that market. So this looks like this now years playbook that's playing out of the crypto native sort of creeping in on their business. Should banks really be paranoid about what Ali, and also from her own experience that she detailed, Constance described?
Yeah, I mean, there are two ways of looking at it. You can say that that's a huge opportunity for banks, but you could equally say that that's a huge challenge for banks. And I think the majority of the banks are still very much in the second bucket, where they are really getting paranoid. And the reason why banks are getting paranoid is because it comes down to the mass adoption. So if I take Constance's experience, it really comes down to the fact that users, consumers, every one of us is utilizing crypto and is able to pay, and very often faster, more secure, more cheaply with crypto. So I think it starts with the mass adoption. It starts with what consumers expect, and then translates into what businesses are asking for. And anecdotally, I can tell you, I was at the Bitcoin 2022 summit, in Miami last week, and we got a number of very large businesses, marketplaces in transportation, healthcare, etc., coming and asking how we can actually provide a payment service that is Rails agnostic. What does that mean? In practice, it means allowing Constance to choose whether she wants to buy her piece of art through a Visa MasterCard, through a bank wire, or through payment initiation open banking that's popular in the UK, here in Europe, or through using the blockchain. So yes, banks are absolutely paranoid about this, because a big portion of the value and the volumes and the revenues that Ali was referring to is now sitting outside of their ecosystem.
It's certainly, and it's worth asking inquiring minds here. I think you all want to know this too, but I do. Who all here has a background in banking? If I get another raise of hands, I promise I'll only do like 2 of these. I know we're guilty. We just keep them up. I just want to. I promise we're not picking on you. But yeah, there's some here, and I think it's important to have this conversation.
I'm actually very, very surprised to see so few hands in the room, because what I'm noticing more and more, especially in the larger market players, whether it's FTX or Crypto.com or the other larger companies, is that they're building more and more that regulatory muscle, and that muscle coming from people with traditional financial services payments background experience.
Yeah, certainly. I've seen a lot of hiring reported on it. To a BlockTelegraph and Grit Daily, that's for sure. Just poaching is probably a more apt way to put it. But we won't escalate this. What we will do is focus on something specific that Constance said. She used USDC. I think I heard that right. You didn't want to use USDT.
No,
wanted to
no.
use USDC,
I didn't
right?
want to use Bitcoin because I
Yes.
want to keep my Bitcoin.
Right, which brings us to Sam, because those uninitiated on Damex, his company, they've been doing payments in stable coins, and focus on stable coins, I should say, for years now. So why focus on stable coins?
Yeah, it's interesting. You guys can hear me okay, yeah? So actually just sitting back and listening to everybody here, it's been an interesting observation because we've really lined up this, what I'm about to say, well, because we've talked about the unbanked individuals in Africa.
We're literally all here for this moment right now, Sam.
You've lined it up,
Literally
man.
said
No,
that.
I'm about to knock it out the ballpark. I'm about...
You can say that out loud, too, if you want.
We haven't even prepared for this.
Right, so we've spoke about the unbanked in Africa, and largely you asked, has anybody here bought anything with crypto? There's a few hands, even fewer than bankers in the room, and I think we could easily call the audience the overbanked or the West, right? Like we don't have problems with buying something in the shop. We wouldn't have problem buying 2 pieces of art in Paris. Like there's multiple payment options. It's fast. It's secure. We trust in the system. So we are the overbanked. We spoke about the unbanked. And in businesses, there is also the overbanked and the unbanked. But in businesses, it's not necessarily segregated by jurisdiction as Africa versus the West. It's also by industry, right? So high-risk industries, low-risk industries. And you'll find that high-risk industries are largely unbanked as well. Crypto companies, of which many of you probably work in or even own in this room, you'll agree with me that you might have had troubles with banking in the future, acquiring a bank account. Okay, maybe you have 1 or 2 bank accounts, but because beggars can't be choosers, it's not like you have a variety of options out there. And therefore, to tie into what you were just saying, yes, we have been operating crypto payments for 4 years now. We transact around 150 million euros of USD payments per month, which is not big, by the way. I mean, we
Including
use
some
FTX
art.
in the background. What?
Including some art, perhaps.
No art yet. No art yet. No,
Constance, this is still your opportunity.
Unfortunately not. But yeah, so our biggest clients are unbanked European companies that are in high-risk industries that cannot achieve obtaining a bank account.
By the way, I could equally say the same thing for traditional payments. I guess you're referring to crypto payments and I'm referring to fiat payments. So I guess the same logic applies whether we're talking bank rails, card rails, or crypto rails.
And certainly, and it begs the question, I'll go to you, Ali, on this. Is it an obstacle that there are so many options? There are so many different cryptocurrencies that you could use for payment. Some are specifically for it. Of course, there are others that people do seem to sort of buy and hold for some form of appreciation or perhaps other reasons. Right? Is that an obstacle, Ali? Or an asset?
I think it's like a pre-Cambrian era of all this payment stuff. I mean, it's very nice to see every effort, every new design. I mean, at ARF, we have a perspective of doing these kind of things, but nobody knows at the end of the day. And I mean, there are lots of other people trying to do the same things with different designs. So it's basically you have some need there, and you try to provide a solution to that need, and it's all okay. So I think it's a huge asset that we see this surge of different variations of different assets, different financial instruments translated into cryptos, as we talked about back in the room. I mean, we see very similar things in traditional finance, and we see the same things translated to blockchain, cryptocurrency, digital assets. I think it's a huge learning curve. I mean, today we learned that Sandwire is acquired by e-commerce payment company. So I mean, we learned a lot, and everything is so interesting. We are maybe on this very, very early days of a new 10-year or something like that.
Right. Certainly, it does sound early, and I appreciate your metaphor, so I'm going to run with it. For Constance, in regards to FTX and Ali's primordial petri dish of cryptocurrencies that he just described, it would seem that payments is in fact a distraction. For those uninitiated on FTX, it is Sam has done a killer job of sort of going hyperbolic, right, parabolic rather, onboarding a lot of people who want to trade crypto, some who had never before owned any. It would seem like the thesis would be to keep it on the platform and not necessarily use it. it looks like a distraction. But unpack your thesis, Constance, and explain why payments would be important to what is already a very successful trading platform that is FTX.
So I think payment. Is one of the key areas we identify to push forward crypto mass adoptions. So now we look at crypto community, we think it has grown tremendously. But if you compare the crypto users to the traditional finance instrument users, it's actually a tiny little fraction of it. And the monies in crypto is like a tiny drop compared to the traditional financial market. So we think it's still a long way to go. Of course, we've built a successful trading platform, but what's right? What's the next? We want more people to actually use crypto, not only trade, because we either hold it, buy it, sell it, or trade it. It's like one way of.
But what's wrong with that? I'll answer your question for you. It would be, rhetorically, or not so rhetorically, you would want a bigger trading platform. Why not focus on what you do really well?
So we have to acknowledge that some different people want different things. If we want to be one of the biggest crypto companies, or we are aiming to become one of the biggest companies. We're leading platforms. We just remove crypto. You can't just target crypto people. And what we do constantly is to push crypto to non-crypto crowds, which including doing educations, implement payments, which is a easier concept for them to understand rather than, hey, come and trade crypto, which they will feel far-fetched. But payment, for example, we have credit card, FTX Pay, and we have FTX cards. So by implementing crypto into that card, they can just tap and pay. It's basically what they have been doing with their Visa cards, but now they just have to be accepting that there's like a payment processor behind, and I'm able to link this with my crypto accounts, but I don't have to do much other than tapping the card and top up my crypto accounts, which is something that we want to do to encourage the crypto mass adoption. So we don't think that this is a subtraction from the business. I think it is part of the business for us to reach to a broader audience and to push for adoption.
Certainly, and thanks for sharing that, because it helps us unpack the next chapter of this talk, Iana, which is actually back to now that our minds are wrapped around those outside of the overbanked, to borrow Sam's term. It begs the question: is it actually easier, perhaps, to start where fiat might be vulnerable, might be volatile, where cards, like in Senegal, perhaps are irregularly working? Easier to perhaps start there, where there's perhaps more of a need, than in the overbanked. Your take, Iana?
That's a difficult question to answer. I think
why I asked.
Yeah, of course.
That's why I asked
you. Asked the difficult
without
questions.
without any indication of what.
But me being a lawyer by background, I can argue both ways. So I could argue that in a way, yes, the demand and the need in a way is more urgent in those underdeveloped and underbanked markets, where I guess access to traditional bank account is simply not there. Access to traditional Visa, MasterCard or credit is simply not there. And I guess the most sophisticated payment method is a mobile wallet, because as we know, in many of those markets, that's still the case. So I can absolutely see why starting there with pushing payments in those jurisdictions would make sense. Equally, however, I think we have to recognize that the level of education and I guess consumer habits in those well-banked markets that we represent here today, in a way makes the job of changing the consumer behavior and the consumer adoption easier. So I'm sorry to disappoint, but again, I can argue both ways.
So either way, that sets Sam up for the natural question to ask him, because inquiring minds, Sam, want to know from your experience. We assume that you have quite a bit of data on this, and we'll go to you on the same question. Sam, if you could describe for us what you have seen, if you've seen any changes from that nucleus of client base that you worked with, and if perhaps there's been a proliferation or broadening of the geography really all over, perhaps. Not indiscriminately, but perhaps irrelevant of where people are. Sam?
Gosh, really? You're gonna hit me with that one? Okay, no, I'm joking. Right. So yeah, good question. I mean, look, we've been pitching stablecoin payments for over 4 years now, and at the very beginning, people were looking at us like we were crazy, and we used to, and we still do to this day. We say one thing: look, when you get asked if you want to be paid, when you get asked by a client if you can receive stablecoin payments or not, you know who to call. Like, come back to us, and that continues to happen. Merchants that we pitched to 2 years ago, 3 years ago, come back to us. Hey, we were just asked if we can be paid in stablecoins. Are you guys still doing that? Absolutely. Guess what? We're doing a lot of that right now. So yes, we can help you. To kind of like touch on your question, we have, I mean, the financial industry, crypto aside, is complex, and we really haven't even seen a consolidation of global payment rails as it is. It's still extremely segregated worldwide. There's different payment rails in Africa, there's different payment rails in Asia, in Europe, in the West, in the CIS regions, and all over, right? And this is not integrated, and it's not smooth. So let alone trying to integrate and create a system where now you throw stable coins in, it just makes it even more complex with governments issuing their own stable coins and whatnot. So it's not easy, but I can say that we've had some really cool use cases. One where, to throw in a tough jurisdiction, which is what you just mentioned in your question, we have a client that's a big German car manufacturer, and they're one of our biggest clients. They have been for 3 years now, and they purchase their steel from South America and Brazil. Now, when they make payments, to touch on how like unintegrated the current financial system is. They have euros. They need to pay for their steel. If the steel company receiving the payment wants to receive Brazilian real, well, there's 3 or 4 correspondent banks that money needs to touch before the manufacturer gets his money. So what we do is we receive the euros, we buy USDT, USDC, we send it to the manufacturer who has local rails on the ground. He gets it in, I don't know, 20 minutes, like an ERC20 or a Tron payment. The local manufacturer has his money, and the steel is settled, or whatever that logistical process is. But just to think, like, you don't have to go through the bureaucracy of dealing with a couple of correspondent banks in different regions of the world where payments get lost, mixed up, T+4 settlements, FX fees, and whatnot. These guys are getting the money in 30 minutes now. Now that's the power of stablecoin payments in difficult jurisdictions.
It's certainly, I'm surprised we don't get a round. There is a round of applause out there
That's
for you
me.
on the 30
That's
minute.
for me, man.
On the 30-minute note, and going back to answering the question of are you crazy, and they pose you that, all I heard was yes. That's what I heard from this whole from your soliloquy. I'm obviously kidding. I'll reel that one back, but certainly on this note, just develop this a little bit further, just for both of you. And I'll bring in this Ali in just a moment. But Sam, are they now holding those who perhaps thought you were crazy, or those who don't, like this automotive maker? Certainly they're using Damex, and same for the steel company in Brazil. Are they holding now like a reserve, right, like a treasury of crypto, or are they really just using it as the sort of like the the whoop section of the bicycle race, as an onboard and an offboarding?
Yeah, good question. So this specific company liquidates its stablecoins into local currency, but we do have companies who are more and more just holding their stablecoins, maybe yielding and making some interest on those, or they have a necessity to hold them to pay for third-party bills. The Brazilian steel manufacturer doesn't require to pay anybody in USDT or stablecoin, so it needs real, right, for manufacturing costs. But there is definitely a use case where clients are receiving stablecoins and then just holding them as part of their treasury, because they're going to need them to make extra forward payments. So.
Yeah, in some cases, probably I would imagine taxes come into play, and the other is certainly fiat volatility. Some have a bit of a slope to them, I've noticed, fiat relative to certainly crypto, but and then certainly to reserve currencies. Well, categorically, Swiss francs, US dollars, and euro dollars, yen perhaps too. Ali, your take on this and what you've observed, because there are a lot of inquiring minds that want to know about the data, right, and what you've seen and that adoption. Ali.
I think it's a great question in many answers in both ways. And I mean, we talked about the C2C part, and we talked about the B2B payments also. And my take is on of course, between licensed money service providers from all around the world. We saw that the if you want to solve the problem, you have to solve it from all the journey. I mean, let's say for you cannot really provide just stable coins without providing any FX to local settlement. I mean, local currency. I mean, if it's preferred, it's okay, but you have to provide some FX, some settlement bank, or some kind of infrastructure, basically. So what we see is providing stable coins and settlement routes I mean, we are now live in 60 countries, and we have around 200 licensed money service providers in our pipeline. But we understand that we have to have a liquidity option, liquidity providing option to that MSBs. So we launched a credit line with the support of Stellar, and the idea is per transaction we provide a working capital credit line in stablecoin for all MSBs. So if you don't, there is this locked capital I mentioned, and if you don't have any money and you don't want to pre-fund right away, because I mean, if you don't have any money in your account in ARF, then you can start easily via APIs, use that credit line per transaction, and it will be settled in real time to the payout partner for that transaction. And we see huge demand. I mean, we already sold out all the facility, and we are looking for more, because I mean, in money service business, if you are successful and you become more successful, you need more capital. And that's, I mean, I'm trying to say in the essence, I'm trying to say it's not only one technology, one blockchain rail or a protocol. It's a whole system you have to solve and understand and bring together.
But you brought up a new problem, and so that we're all following along. You mentioned we were all listening very carefully, Ali, and you said that you sold out your credit line facility. You sold out. That's not necessarily a good thing. It's a good problem for you to have, but that does imply that there isn't more credit line available through your relationship with Stellar, at least for now. It then naturally begs the question, do these markets, does the crypto market and those who can facilitate it, like Stellar and perhaps others in this, the primordial petri dish that you concocted for us and illustrated for us earlier, are they able to handle the demand that is so high that you just illustrated?
I don't think so.
I don't think so.
No. I mean, but it's let's say the crypto market is 2%, and the payment industry is the rest of 98%, somewhere 5% to 95%. I don't know. I mean, it's not easy to handle this kind of demand and liquidity if you find the right angle, right perspective. But I mean, we'll see. I mean, this is where it gets exciting. I mean,
this is the ARF paradox. For those who are uninitiated on ARF, he's a famous Turkish mathematician from the 1950s. The paradox, the ARF paradox, so goes that you must solve for this perhaps it's a calculus. Let's just simplify this calculus that Ali just described, which is can the markets handle and when and how the tools. So on that note, on that equation, and I'll go to you, Constance, just 1 second, and I'll give you a moment to think about how to solve this. We will leave 5 or 6 minutes for. Oh, I lost my timer. 5 or 6 minutes for Q&A from the audience. We got a lot of emails on this panel for questions for you guys. I know there's some that are out there. I've asked a lot of those questions that got emailed to us naturally, but we'll have a walking mic, which is literally a person walking around, so that you will get there in just a moment. I'm going to Constance, and then later, Iana, I'll give you the last word. Constance, I've given you a moment to think about this, and I know if you had another point that you wanted to add, we can go back to it. But on this constraint, your take. Your constraint that Ali described, it's called the ARF paradox. We've just named it here, and it is that it addresses the obstacle of whether the cryptocurrency market can handle all the demand, including for, as in his example, the credit line from Stellar. To which I thought you might reply, "What problem, Ali? we can solve it. Go your take though, Constance.
Yep. So we actually thought about this. So the next step for crypto mass adoption is really the throughput, how much traffic crypto can bear. So, for example, I did this really simple research on for credit Visa and MasterCard. Every second, it has about 5,000 transactions going through globally. And if a blockchain, one of the blockchain is able to provide this throughput, then is potentially able to take over the entire credit card world. So far, that's why FTX works very closely with Solana. That's why one of the reasons we choose to partner with Solana closely, because they offer tremendous throughput and in a very fast speed and very low cost. So I think it is a constraint for now, but I don't think it's like a unsolvable constraint. So for sure, there's a lot more demand in the actual world compared to crypto. And especially for credit lines, I think with more institutions coming to provide more liquidities, the credit line wouldn't be a problem. But of course, there needs more regulatory clarities around that. That's why FTX is known to be very active in talking to CFTC and SEC to push forward the regulations in the US so that it could have a positive impact globally about crypto regulations in general, to help institutions to come in and to provide mass liquidity to this market, so that we not only solve the credit line constraints, but also we have solutions to provide high throughput, high speed, cheap transactions that could support crypto payment in a long way.
Certainly sounds like a bet on Solana. And on your note on regulation, just to be respectful where we are, we're in Paris, so certainly there's French regulators and EU regulators to talk with as well, and I'm sure they're on the list in eventuality. And we'll go to question in just one moment, but I know that people are thinking about this for you. Sam, do you see the same constraints in your own business with Damex, particularly around stablecoins, on the horizon, or are they right in front of you, Sam?
No, we use FTX, so we're good.
Okay, well, that's an endorsement there. Solana is sold, FTX is sold. So with that, we have a walking mic. We'll go to questions. If you could just raise your hand and make it really easy for a wonderful proctor to bring you the microphone, unless you're stunned in silence. If you could just raise your hands. I have at least one question here.
Hi there. This is a question for Sam. Great panel, by the way. In terms of the stablecoins that you use, do you see a development between algorithmic stablecoins, or you stick with the normal stablecoins? Don't worry, I'm have a little bit of a caveat here. I'm from a stablecoin issuer as well, so I'm just interested to see your thought process.
Yeah, good question. I mean, a lot of we trade, I guess up until about a year ago, like 95% of our volume was Tether, and it's probably 50-50 USDT, USDC now. We haven't had any requests to trade algorithmic stablecoins as is. Maybe some light UST inquiries, but I don't know. I feel like USDT, as much as it can get hammered for a question for its questionable collateral case, I think the industry trusts it. It's sustainable. Like, it still hasn't. It's sort of stood the test of time. I don't want to like burn any bridges here, but I find it hard to personally see a future for algorithmic stablecoins. I definitely see a future for regulated stablecoins. I do like algorithmic stablecoins, and we do a bunch of yield farming within the firm, reap those rewards. But I don't know. I just, as a firm, we're all about centralized and regulated stablecoins. Yeah.
And we have time for one more question. Big raise of your hand so she can see you. There must be. I can't. Oh, there he is. Yes. I believe you're one of the. You had a banking background, right?
I am. Yeah.
Great. Now I am picking on him. But.
Cool. Just one question for Sam. Do you think in the future you'll be able to mix fiat payment and USD payment? I mean, crypto payment?
Yeah, for sure. I think that is the exact future. I think we are going into a future where, actually, let's speak about the future, because this is about the future of payments, right?
We've been the whole
we
time.
have been, but I've been zoned out. I've been thinking about getting home right now. So I think the future is all about integrating crypto or stable coins and fiat, just different rails. I don't think we're going to a future where we're only stable coins. I don't see that. And particularly at Damex, for the last couple of years, we've been building infrastructure where a lot of clients use fiat currencies and stable coins already. Like if you log into Damex for Business or our Damex application, you can deposit stable coins, fiat currencies, do exchange. You can use each as collateral potentially. So I definitely see a future where stable coins and fiat currencies will be used complementary as opposed to just a single line, if you like. But yeah, go on that. Yeah.
I just want to add a really quick note about that combination. So fiat and stable coins, and another thing that we constantly think about is CBDC, central bank digital currencies. So with all this, I think it's a way to push for mass adoption. Just want to bring up the possibility of CBDCs, because for crypto payments to be massively adopted by somewhere, you need the government support.
Yeah, comma, in the future, to keep Paris blockchain week happy. Yeah, I'm going to give you the last word, and then we'll wrap up to be respectful.
Sure. I guess given, the concentration of so much capital and experience and enthusiasm, frankly, about the crypto space, maybe the one last word I'd say is we all have to, the different companies and spaces that we play in, I think would be lovely if we can all focus and pause and think about how we can use the development of these new technologies and new coins for greater financial inclusion and for better, more sustainable development in the future.
Certainly.
So that would be my appeal to everyone here today.
A good note to end on. Live in abundance. Certainly, there are a lot of people who have here. We're lucky to be here. That's for sure. Privilege, perhaps, too, in a lot of ways. And to think and be aware, and I'm glad that we did that on this panel. I'm Jordan French, executive editor at Grit Daily News in New York, also publisher of BlockTelegraph. That's all the time that we have. Big round of applause for Iana Dimitrova, Sam